Maybe we'll kick off with just a bit of an intro on business you're from, perhaps the national sports team you once represented, and any other information you think might be relevant.
So David Giffin, I'm CEO of Centuria Bass. Only very recently took that role in November. A very long time ago, I used to play rugby.
It's a big deal in New Zealand, obviously, you know.
Yeah, Corey Nugent, I'm the CEO of Resilience. Been in that game far too long. I won't, like the guys earlier, I won't confirm how long. Sport team. My main mission here is to get Mike and George to convert from their New Zealand sides back to the Waratahs, which is most important.
I think you got your work cut out for you. Do you want to talk to us a bit about how you guys are seeing the Melbourne market, and just a bit about maybe the Latent Defects insurance product in general for those that aren't aware of it?
Yeah, sure. Interestingly, it's been, I think, at these events, Mike, in the past, we've spoken about how tough it's been in Melbourne, in Victoria, but I think there is some green shoots that are starting to show. We're talking to people all over the country, and Melbourne is now being seen as an attractive proposition to come back to. There are things happening here. I'm not saying that the world is wonderful. It's still hard. It's tight. There's taxes. There's all those things. But I think the other states and the other cities have now seen their markets. We spoke about Queensland before, southeast Queensland. I think it's difficult to find builders and trades, and the cost has gone through the roof, and Sydney is slow and expensive and the like. And I think Melbourne is now being seen as an attractive option. So it's positive for Melbourne on that front. Latent Defects is something that we're now investing heavily in Melbourne. We've opened an office. We've got a representative, Dom, down here now that is servicing the Melbourne market. But Latent Defects is a product that's existed around the world for about 70 years. And we at Resilience introduced the product into Australia about 4 years ago. It's now been picked up, and we're speaking to quite a number of people in Melbourne. It's something that delivers a very different way of insuring built property, where it's not an input cost as such if you deal with it properly. It's something where you can turn that cost into a profit centre. And we've got evidence to suggest that from around the country, that proactive management of LDI, as we call it, or latent defects insurance, will turn that cost element of the insurance into a positive for the developer and builder.
I think one of the things that when we kind of first got to know each other was we look at our analytics very carefully, as you can tell by some of the presentations. And one of the things we look for is, what is it in our analytics system triggers anomalies? So when something unusual happens from a user behavior point of view, we've had a few of them over the last few years. One of them was Coposit, which some of you guys may know as a product and that's mostly based out of Sydney, where you can buy with 10K. There's another one of these products with Resilience Latent Defects Insurance was another one that kind of triggered our system. What we noticed is when a user, as you saw, if a user reads an article before going to a project, the conversion rate's double. If the article is about latent defects insurance being available on that project, it's double that again. And same with that other product I mentioned before with Coposit. So we kind of look at these trends and say, what are the consumers looking for? How do we kind of get more people to use it? And then how does that kind of impact the broader off-the-plane category? It's because we're all ultimately competing with the established market.
I think that's right. Before I go to David, I'll convince David of some stuff on the finance side at a different time. But in terms of where that's at, the different segments, whether it's finance, whether it's real estate, whatever it might be, I think what we found, and we're putting together some collateral at the moment that will support this, independently verified, on how we turn those factors that we see, Mike, while we've been working on it. What are the drivers or the benefits of being early with LDI? So there is evidence around Australia now of speed of sales. They sell faster. In Australia, in the consumer market, I think Angela and Jacob were talking about it earlier on, around the confidence issue. Around Australia, we have a consumer confidence problem in new product. How do you address that? We have evidence around Australia, again, of increased sale prices off the back of that confidence, because the product is delivering that financial and quality assurance for a 10-year period. So it's addressing many of these elements where that saleability of the product is better assured. For the finance side, here's my pitch, for the finance side, it de-risks that finance element. So we have financiers now in that market that are offering better product in terms of either rate, or in the case of one or two, even talking about offsetting the cost of the insurance through the funding mechanism because of the de-risking element that the insurance product has on that project.
Awesome. And David, give us a bit of a rundown. Centuria Bass, what's the part of the market you're focused on? What are the types of problems you're solving for the customer outside of giving them the cash they need to get going?
Well, what I would say is that a lack of capital is certainly not holding back development at the moment. There's, it's intensely competitive to fund projects. I think, any developer who's gone to market seeking funding would have a pretty good picture of that. Funding really good projects is hard, and I enjoyed the discussion with Angela and Jacob before. That gives some insight into how hard developers are working, just on the marketing side to be able to have a successful development. And that really says, how hard that market is at the moment. We're reviewing projects constantly. We've seen the number of viable projects, in the total aggregate that we look at shrink as a proportion across time.
Is that in Melbourne or across the country?
Across the country. And yes, Melbourne's got issues, but every market has its issues. I'd say Sydney, it's really planning. Whilst costs are reasonably stable in Sydney at the moment, we've seen some horror stories in relation to planning. And when a project is so tightly strung in terms of getting the right outcome, a 12-month delay in a project can really make a big difference for a developer. Melbourne, we're cautious. We are very confident that at a point in time that will, the relative value position will right itself. To have a population, in Brisbane, which is not even half of Melbourne, which, now has a similar cost of housing, just in the long run is ridiculous. But
and Adelaide, right?
And Adelaide. Like I wouldn't be investing in Adelaide right now in terms of being an equity investor.
We haven't committed to a Market Insights live in Adelaide just yet, but who knows?
And WA is roaring as well. Similarly in WA, we're cautious because of the volatility we've seen across time, how cyclical that market's been. And yes, there's a bigger population there now, which sort of drives a broader economy, but they're still so intrinsically linked to natural resources, iron ore in particular. Sydney, we love. It's just a very big, really capital of Australia in terms of the economy. And we love, entry-level product at the moment.
And to Melbourne, so if I'm a developer in Melbourne, what type of product do you think what type of product do you want to back in Melbourne?
We want to back entry-level. It's just a much deeper market. And, people are purchasing property really out of necessity as opposed to, something they, in that middle market, it's aspirational. People are moving up or, sometimes stepping back from houses into apartments, and there's no catalyst for them to do that at the moment. And that's bearing out in, the rates of sales that we're seeing across projects in Melbourne.
And what do you think about kind of the house and land market versus the apartment market? I think I've seen some noise around, obviously, the price to the cost to develop an apartment per square metre being higher. Does that worry you guys? Like, how do you think about that?
It's probably harder in the apartment market at the moment for developers. I'm talking about a developer's perspective, but that doesn't mean there aren't select groups who can make that work. It's just from a financier's perspective, understanding who those groups are, who to support, and really getting comfort with the competence of that group, the planning from start to finish. We've seen through the marketing discussion how detailed that needs to be to ensure success, and you want to just be backing the right horse.
And are there some practical things that you can suggest to people that are they should be thinking about early that kind of makes them more fundable, or just things that you can that are going to give them more likely to get a green light?
It's the vanilla, it's the vanilla items, which is key to any developer's success. Really understand their product, who is their market, how deep is it. It's not it's not rocket science, but the good groups do it really well, and they understand where their strengths are. They tend to develop niches in particular markets, and they service that market really well.
Sounds like Emma Lowe and Lowe living on the Bayside. Corey, do you want to talk to us a bit about kind of the types of projects you guys are looking to back in with the insurance product?
Yeah, look, it's really diverse. We have projects. If I give you some numbers, Mike, we're probably sitting somewhere around about 240 projects now that we're looking at across the country, or that insuring or have completed. There's about 15,000 apartments in Australia that fit under the LDI banner. So it's really started to ramp up over the last 12 months, 18 months in that space. I wouldn't say there's any one fit. Every project is insurable. I think it goes to some of those points Dave was talking about being prepared, being ready, doing the work at the front end and understanding what your investment is. One of the benefits of the LDI product is proactiveness pays off. So getting involved at design level, getting involved at that point really assures those confidence levers that enable the developer in that case to be able to upsell that quality confidence into their buyer market in the display suite.
And do you think because I know the project market I've spoken to that we're working on, whether it's Daycorp or some of these other developers, particularly in Sydney, a lot of the times it's the project marketers that are pushing the developers to do this because it makes it easier to sell the projects through by giving the consumer the confidence.
Yep, that's exactly where it started, Mike. It is the project marketers that are heavily involved, but now it's a cross sell. We've got a lot of funders now talking to us about that space because they see the benefit in their investment through that project. But the project marketer is key, and I think Angela and Jacob were talking about it earlier around what is the display suite? What does it look like when I go in? What confidence am I giving? What is there? How do I see quality? How do I deliver that? What we have seen, and again, we're working through a project independently with external operators now to verify and demonstrate what we've seen with the likes of the Daycorps, with the likes of Urban Property Group and these sort of entities that are producing, whether it's entry-level or luxury property, the benefit is there. They're upselling, they're selling quicker, they're selling at higher rates because of the benefit of confidence within those consumers.
Outlook for the year, for the remainder of 2026?
I still think it's a bit of a bifurcated market. There's Southeast Queensland continues to roar ahead. If you can find a builder that you trust and can work with or have in-house capability, there's a lot of demand. Sydney's probably steady. I think it started to really pick up, and we could see it when interest rate outlook was for reduction in rates. But the kick up and the outlook now being sort of upward instead of downward, I think is just going to keep it pretty steady. And I am hoping that Melbourne sort of starts to see a bit more interest, and maybe the catalyst is interstate investment.
I thought you were going to say
driving demand, but the change of government's really the big one. Yeah. And you and I were talking briefly before, and so many of the issues in construction, development, delivery of housing have really just can pretty squarely, I think, be laid at the feet of, federal, state and local governments over the last sort of number of decades. They have not helped, in terms of bringing product to market, making sure it's affordable. And I completely understand why that's hard, because it's politically difficult and no one wants to be out of office. But, they're serious issues. And I think, why I'm happy as a credit investor is because I don't see the government solving that time anytime soon, and therefore have confidence in the demand and supply gap will remain for an extended period, and therefore prices will remain pretty high.
And on that positive note, thank you very much. Appreciate you guys. Good on you.